This video, Getting to Know Flood Reform, will give you an informative look at a program that has helped protect America from the devastating effects of flooding for more than 45 years, and how recent legislation could impact you and your community. To introduce you to this important topic, here's your host, Kimberly.
Hi there, I'm Kimberly, and I'm here to talk about something most people don't think about every day: flooding. The disturbing news is that flooding is America's most catastrophic natural hazard, and it causes, on average, almost $3 billion in damage annually. The good news is that since 1968, an important government program has helped homeowners and businesses that have been hit by floods to get back on their feet. That program is the National Flood Insurance Program, or NFIP, and for over 40 years it has helped communities to reduce flood losses and to rebuild when disaster strikes. This video will help make sure you're in the know about the program's history and how it works, as well as filling you in on some important changes recently enacted by Congress. You'll learn what these changes mean for both the program and your community, the timing of these changes, and how they'll help ensure that the National Flood Insurance Program remains a strong and vital resource for our communities. So let's get started.
Section 1. History of the NFIP and 2012 Congressional Reform.
Throughout America's history, floods have been a major cause of property damage and loss of life. As far back as 1936, Congress recognized this problem and passed the Flood Control Act, the first national construction program aimed at containing floods. Flooding from hurricanes and other storms remained a fact of life, however, and in 1965 we got another reminder of nature's destructive power. Hurricane Betsy, which devastated the Gulf Coast from Florida to Louisiana, caused more than 70 deaths and was the first storm in American history to cause more than $1 billion in property damage. All of this damage took place in an era when few homeowners and small businesses had access to flood insurance. And all too often, the victims of floods were left financially devastated and unable to rebuild.
With the impact of Betsy and similar disasters fresh in their minds, Congress passed critical legislation to protect Americans from the devastating financial impact of flooding. The National Flood Insurance Act was passed in 1968, and for the first time, homeowners and businesses could purchase flood insurance through the National Flood Insurance Program. In exchange for the availability of flood insurance, communities had to agree to monitor and manage development in the floodplains and adopt new standards for construction.
In the years after the program's beginning in 1968, two trends would become clear. The first was that the program would quickly grow to assist more and more communities. The second was that Congress would continue to review the program, making modifications and reforms as needed to keep the program strong, effective, and financially sound. The program's growth was explosive. From a mere 4 communities served in 1970, it grew to involve almost 10,000 communities by 1975 and over 16,000 by 1980. Along the way, some key changes were made. The Flood Disaster Protection Act of 1973 expanded the NFIP by greatly increasing the coverage limits and total amount of insurance available to homeowners and business owners. The Act also set requirements that flood-prone communities participate in the program, as well as mandating flood insurance where federally regulated loans were issued. In 1976, the concept of base flood elevation, or BFE, was introduced to the program's flood insurance rate maps. BFE refers to the location and level of a 1% annual chance of flooding. This concept is important since the higher a structure is built above the base flood elevation, the less risk it faces from flood damage. For that reason, demonstrating that the higher a building sits above the base flood elevation level entitles that builder's owners to pay a lower flood insurance premium.
An important program change happened in 1983 when the Write Your Own (WIO) program began. With this change, private sector property and casualty insurance companies began writing and servicing NFIP flood insurance policies. The federal government remains responsible for losses while gaining improved service to policyholders through the WIO's industry knowledge.
With the help of these and other reforms, the program continued to expand to more and more communities. And by 1994, the program was responsible for 3 million policies, and the $1 billion annual premium generated over $349 billion in insurance coverage for homes and businesses. However, the year before had shown that participation in the program was still not robust enough to cover major flood disasters. After the Midwest floods of 1993, data showed that only 10% of the buildings damaged in those floods were covered by flood insurance. In response, Congress enacted the National Flood Insurance Reform Act of 1994, or FIRA. The act increased the mandatory coverage requirements to further ensure that flood-prone communities would have more structures insured and a way to recover. A decade later, the Flood Insurance Reform Act of 2004 was passed to address another problem, namely repetitive loss properties. These were insured properties which had experienced multiple flood losses totaling thousands of dollars, sometimes even exceeding the total value of the building. These repetitive loss properties only represented about 1% of the insured properties in the program. However, they were responsible for 25 to 30% of total claims losses and were costing about $200 million annually. The Reform Act of 2004 established the Severe Repetitive Loss, or SRL program, which defines an SRL property as one which has received 4 or more separate claim payments of more than $5,000 each, or 2 or more separate claim payments, building payments only, where the total of payments exceeds the current value of the property within a 10-year period. FIRA 2004 authorized the SRL and repetitive flood claim grant programs for states and communities to help mitigate future damage by making improvements to repetitive loss properties. Thanks to continuing reform efforts like these, the NFIP was able to expand through the years while ensuring that the total claims paid in a given year remained below or in line with the premiums paid. This ensured that the program remained sound, strong, and reliable without forcing taxpayers to cover losses. However, in the last decade, we have seen a significant increase in turbulent weather patterns and natural disasters that have created tremendous challenges for the program, particularly the hurricane season of 2005. Hurricane Katrina in 2005, coupled with Hurricanes Rita and Wilma in the same year, resulted in $17.7 billion in claims paid, with $16 billion from Katrina alone, far in excess of the program's annual premiums. After studying the situation, Congress came to the realization that further reforms were vital to ensure that the National Flood Insurance Program could remain in existence as a reliable and financially sound resource. As a result, the Biggert-Waters Flood Insurance Reform Act was signed into law in 2012. Wow, we've covered a lot of history of flooding in 3 minutes. Well, now here's more about how the NFIP is being impacted by the Biggert-Waters Reform Act of 2012, or BW12 as we like to call it.
Section 2, BW12 Enactment.
As we talk about Biggert-Waters, there's 2 things that Biggert-Waters was for. One was to provide stability into the NFIP, the National Flood Insurance Program. It did that by reauthorizing the program for 5 years, which gave us stability in what we do and what we can present. But probably as importantly, or more importantly, are the reforms that are in the program, and we'll walk through those. The basis for Biggert-Waters is to move towards a risk-based program where we have rates that actually reflect the risk that people are facing in a number of hazard areas.
The key motivation behind the BW12 was making sure that the National Flood Insurance Program would continue to exist and serve as a valuable resource and provide financial protection. In order to do that, it was important to make sure that the program would take in enough money in premium payments to cover expected flood claims as well as the program's administrative costs. In the insurance world, that concept is known as actuarial soundness. Like any insurance program, the NFIP must be actuarially sound in order to survive. As Congress reviewed the soundness of the NFIP, a key fact became clear. When the program was created, existing businesses and homeowners could buy flood insurance at rates that didn't reflect the property's real risk.
After 45 years of data, gathered by FEMA in coordination with communities nationwide, flood maps, known as flood insurance rate maps, or FIRMs, exist for 98% of the nation's population. These flood maps identify where high-risk flood zones are, known as special flood hazard areas, as well as the moderate and low-risk areas, and risk premium zones for each community. In high-risk areas, better building practices are used and lenders require flood insurance as a condition of issuing mortgage loans. However, a review of flood insurance program showed that many older structures in floodplains that were built before the first flood map, known as pre-firm, were paying discounted or subsidized rates that didn't accurately match their real risk of flooding.
It was Congress's priority to resolve this situation and bring rates in line with the actual risks, and to do so in a way that balanced the financial requirements of the program with the financial needs of policyholders. On July 6, 2012, Congress passed the Biggert-Waters Flood Insurance Reform Act. The first key provision of the act was reauthorizing the existence of the NFIP for another 5 years, ensuring the stability of the program through 2017. Now, BW12 also laid out a plan for premium rate adjustments in order to phase out artificially low rates and discounts that can no longer be maintained for properties in high-risk areas. Some changes are already in effect, while others will be put into effect in the coming months. Let's look at the adjustments and the timing for those changes in more detail. The first adjustment began on January 1, 2013, and it applies to non-primary residences that were built before the first flood map, or pre-firm. For insurance rating purposes only, FEMA defines a non-principal, non-primary residence as a building that will not be lived in by the insured or the insured spouse for at least 80% of the 365 days following the policy effective date. Subsidized, in this case, means that these structures were paying artificially low rates which did not reflect the true flood risk. As of January 1, 2013, premium rates for these pre-firm non-primary residences began increasing 25% per year and will continue to do so until they reflect the true risk rate based on their elevation. The next important date of implementing changes is October 1, 2013, when some additional adjustments will go into effect. Now, just like the secondary homes, beginning October 1, 2013, rates will increase by 25% each year until the rate reflects true risk for the following pre-firm properties in high-risk areas: non-residential properties, severe repetitive loss properties, and any property where the damages from flooding has caused claim payments to exceed the fair market value of the structure.
In addition, full risk rates will also be applied to any property not already insured by the NFIP, as well as properties that were purchased after the Act became law on July 6, 2012. Full risk rates will also be charged on any NFIP policy that has lapsed due to the deliberate choice of the policyholder. It's important to realize that not every NFIP policy will be affected right away by the subsidy phase-out, as was discussed a moment ago. In fact, 80% of all NFIP policies are not subsidized and will not be affected by BW12's provision other than being subject to an increased cap on annual rate increases and a new reserve fund fee. Said another way, let's take 100 policies and divide them into one group of 20, representing the percentage of policies that are currently subsidized, and another group of 80, representing the 80% of NFIP policies without subsidies. Of the 20, only 5 will be immediately affected by the BW12 2013 subsidy phase-out. However, the other 15 in this group of 20 could be affected if one of the other conditions is met, such as a policy lapse or sale of the property. The group of 80 is subject only to the reserve fund fee and a capped annual rate increase to keep pace with inflation and actuarial adjustments.
I hope that's been a helpful, broad overview of Biggert-Waters and what's currently happening with the Act.
I know, that's a lot to take in. Of course, BW12 doesn't stop there, so let's get into how the Act will impact the future of flood insurance.
Section 3. BW12 changes after 2013. The 2013 changes to risk rates are just one part of an overall direction of Biggert-Waters' move toward risk-based rates. BW12 directs FEMA to discontinue grandfathered rates as new maps become effective and charge premiums that more closely reflect the individual structure's risk. Grandfathering currently allows lower insurance rates to be charged even though newer flood maps reflect increased risk. The current grandfathered risk class covers a group of structures having a very wide range of flood risks, from low to high, while the premium charged for the whole class represents the average risk. This is a classic case of cross-subsidy, with the lower risk paying higher premiums for their risk levels while higher risks receive discounted premiums. FEMA expects to implement Section 207 of BW12 on October 1st, 2014. In the meantime, there are numerous topics for FEMA to resolve regarding this section of the Act. When that is done, FEMA will provide specific information through wide distribution.
In addition to bringing insurance rates in line with our best understanding of actual flood risk, Biggert-Waters helps to set the stage for comprehensive and far-reaching reforms to help the nation better mitigate and manage flood risk. The Act has a number of provisions that help to start that process. For example, the Act calls for a comprehensive plan to continue making flood maps as modern and accurate as possible, and for helping state and local communities and property owners to effectively communicate about changes to maps and mandatory insurance purchase requirements. It also reforms and streamlines current FEMA programs for community flood mitigation and aims to develop a process to better understand flood events. The Act also authorizes important studies to help support fact-based decision-making about flood insurance and mitigation, from building code studies to researching how to best keep NFIP participation easy and affordable. The Act ensures that the National Flood Program will be able to meet our nation's flood challenges in the future. Thus far, we have talked about the impact of BW12 for policyholders and agents, but there are also some key provisions for lending institutions. Federal lending regulators have already adopted the Act's provision calling for an increase in civil monetary penalties, which can be assessed against lending institutions when they demonstrate a pattern or practice of violating certain mandatory purchase provisions related to flood insurance.
BW12 also incorporates new requirements for lenders when they purchase flood insurance on behalf of a borrower referred to as force placement. Lending regulators are still in the process of initiating rules and regulations regarding an acceptable private flood insurance policy. New escrow requirements are expected to begin in 2014.
I hope this has helped with an overview of the Biggert-Waters Act. Some of you work with flooding and flood insurance every day, but for those of you who don't, it's still good to know that the folks who do think a lot about flooding are making sure that the National Flood Insurance Program will be there to continue to help reduce the risk of flooding nationwide and provide flood insurance protection to families and businesses across the country. So until next time, I'm Kimberly reminding you to be smart about flooding.
For more information about the NFIP, BW12, and a lot of other great flood insurance resources, be sure to check out www.fema.gov. This video is brought to you by H2O Partners.